morning, ladies and gentlemen. Welcome to our weekly investor update. I'm your host, Dan Theok, SVP of Investment Banking. We're bringing you yet another episode today of Mayberry Investor Forum. Today we'll be looking at HONBUN and FESCO Limited. Joining me today will be none other than Justin Scott, Investment Advisor. Welcome, Justin.
Pleasure as always.
How are you doing, bro?
Great.
Great to have you. If you're a fan of the content, don't forget to subscribe. Also hit the bell to stay up to date with the channel. We upload content like this just about every week. Also, if you want to embark on your very first investment journey, you should take that first step with Mayberry Investments Limited. Follow us on social media to learn more about how you can get started today. Well, as we promised, first up, HONBUN, which will be done by Justin. What do you have for us, Justin?
All right, so let's get right down to it. HONBUN, for those who don't know, is a bakery that's been listed since 2011. They produce several of the baked goods and pastries and confectioneries that you may see in the gas station. Your children probably see it in schools, things of that nature. Things like their donuts, their snacks, things like that, right? So let's talk about the financial performance. So HONBUN increased the revenues 23% from $1.3 billion to $1.6 billion. Gross profits went up 30% as well, from $562 million to $732 million. Net finance cost is up, yes, from 1.1 million, to $3.8 million, and net income up 51% from 86 million to 131 million. This is all for the 6 months, so for the last 6 months, right? HONBUN has been doing really well in terms of expansion. They, as a matter of fact, this wouldn't be reflected here, but in about April, they would have opened their 10th wholesale outlet out in Morat Bay. They've really been trying to push a little bit further towards their export markets, expansions, and moving deeper in towards their production habits. So net income would have increased from 86 million to 131 million, a 51% increase. This is over the course of the last 6 months for HONBUN. They've really been stepping further out into their exports and production. This is a really good quarter for them, and then leading up into the Easter months. Right, so considering that it's from January to March, some of these things would have still been making up for the December quarter, as well as heading now into their Easter quarter, where they would have had a lot more sales in regards to things of their buns and other things that's fit the season, considering the seasonality of the type of goods that they do. Current price is $6.86, with a P ratio of 13 times. It's a little bit high for a junior market company of their size right now. But I do believe there's a lot more room for HONBUN to grow in terms of their output, because if you actually take a look at the quarterly financials, their Q2 is it ranges a bit between the 40 million to the 70 million per quarter, and it's been, teetering between that band since about 2019, come right up to now. It's a little bit apparent across several other quarters if you really go into it and check it back. Looking at the next slide, you'll see that. So let's talk about the balance sheet for a second. So the balance sheet total assets would have increased from 1.4 billion to 1.6 billion, 19% increase there. Total liabilities up 25% from 340 million to 424 million. Guys, this is a company with really, really low debt. They have right about now, they have about less than $10 million in terms of debt overall. And it's at a really low rate from VMBS at about 5.65%. So they're continuously paying that down. It's a really low leverage company. And total equity of 1 billion has increased 17% to 1.2 billion from retained earnings. So they're definitely growing there, and they definitely have a lot more room to grow with the other parts they tools. The debt, as I said earlier, is really low, and then the total shareholders to a share capital is about 46 million right now. So there's a lot more room for HONBUN to grow. As soon as they're ready, they can call us down here over Mayberry, and we can assist them towards achieving all of their needs in terms of increasing production. The PE ratio, I want to touch on that right now, is 13 times. It's a bit, about where junior market average is right now.
Yeah,
so
I think the junior market
yeah,
average is
about 13 15 times. There we go. So it's about par right there. And I know with increased earnings, they'll continue to cut that down, and then the market should be looking at them a bit differently as the further plans for the future come to light. Trading earnings per share is about 53 cents. They're going to get that up as they continue to reduce finance costs and they reduce the margins. I don't know if I stated it earlier, but they recently opened their 10th outlet out in Morat Bay. So they're widening their distribution patterns right now, especially going out into St. Thomas, which may not have been properly served beforehand, so they can really set it up further. because they even use their wholesale outlets as distribution hubs for the smaller distributors who want to come and buy from them and further distribute throughout the parish. All right, let's move on to their profits, quarterly profit movements. So they're a bit seasonal in the way how their profits move, they're in terms of the quarters. So for example, the December ended and then the June ended would be some of the higher ones, as you can see right there. As I said earlier, their second quarter is the March ended quarter, and you can see right there how that would increases would come in terms of the April, which is the third quarter when Easter really starts to push up the numbers there, and then the first quarter, which is Christmas times, right? So you can see there's a bit of seasonality and pattern between the profit movements. But as I was saying, they want a little bit more in terms of production to really break through this $40 to $70 million band and further increase from there on out. Let's look at the price movement. So the share price has been teetering down from $10 to about $6, $7 per share. I think as the market started to soften out a bit in terms of the rough averages in general, some people did a bit of rebalancing, and then HONBUN being a bit more seasonal company, people wanted to take advantage of that in terms of the timing when they map out the profits to the share price movement. As well as HONBUN kind of needs to, further show where they want to be going on from here, right? So as people would have noticed, their 10-year tax break has finished out in about 2021, and so that would be increases. It would be a reduction in the net profit from the increases in taxes. But let's see where they go from here in terms of positioning. They recently just appointed Daniel Chang as the deputy CEO, who has been taking his time out to increase their studies to prepare for succession planning. And with the recently acquired safe quality food certification that they got, a very coveted one, only a few companies in Jamaica, as a matter of fact, in the region, actually have the SQF certification, then they can really position furthermore towards doing their export and capitalizing on the diaspora out in America and further regions from there. Dan, any thoughts on HONBUN?
Yep, thanks for that, Justin. I think we're pretty well aligned. Good to see 23% growth in sales flowing through to 50% growth in profitability. Business that has little or no debt, generates good cash flows, well managed, well run. I think we've seen the stock price pulling back mainly because of the high interest rate regime. And our expectation is definitely for interest rates to start trending downwards in Jamaica over the next 3 to 6 months. And then I expect PEs in general to be going back up in the market. So this is definitely a good hold for me, potentially a buy, because I do think it's slightly undervalued. And I do think in general, we're going to see valuations improving over the next 3 to 6 months. So well-run company. We like them a lot. And we'd love to see them trying to raise additional funding. Of course, they have very little debt, so I doubt there's an APO in the making if they have such little debt, with good balance sheet of $1.2 billion in equity, which is pretty impressive. So a great company, well run, happy to see the growth. I think the valuation is only going to improve in the future. Thanks for that, Justin. Up next, we're going to look at FESCO, the poster child of IPOs, Justin,
Absolutely.
in my view. Company that IPO'd roughly 2 months ago at 80 cents. You couldn't get any at 80 cents. They only raised $400 million. I bought $1.30, and here we are 2 years later, and the stock's at $4 now. Profitability up to $560 million, which is 55% higher than what they forecast in their own IPO. So that's pretty impressive. What's happened in the last 12 months? This is the unaudited accounts we're looking at. Revenues up 100% to $26.5 billion. Gross profit up 127% to $889 million. And this is not just price increases, folks, because when we looked at the actual increase in petrol that they shared in their results, they're showing that petrol prices are actually down by 12% in Q4 2023 compared to Q4 2022. So this has a bit to do with the expansion. We know the new store opened up at Ferry. They're now up to 16 locations and expanding. So it's really good to see this kind of growth, 122% growth in profitability, up to $566 million. Another thing I like about that is, despite the fact that prices are certainly far higher than they anticipated, when you go back to the IPO, they thought they would do $360 million profit for this period from about $12 billion of sales. And what we see them doing is $566 million profit from $26 billion of sales. Interestingly, gross profit margin is down to about 3.2% compared to a forecast of 5%. So what does that tell me? That they're on the much higher than expected prices. They're just running a tighter gross profit margin and keeping the profitability going. It also tells me that fuel is obviously an inelastic product, that despite fuel prices being up substantially more than any of us could imagine 2 years ago, that they're still having the turnover and also the profitability. Interestingly, the gross profit margin in Q4 23 was about 3.7%, was higher than the gross profit margin a year ago, Q4 2022, where it was about 3.2%. So in general, it tells me that this business can continue to grow even when fuel prices start to come back down in the next year or two. They'll be able to push on the margins a little bit. So that's what that tells me. I'm not worried about fuel prices and the future growth potential of this business. Additionally, we see them raising about $2 billion in debt funding and putting that into CapEx since the IPO, and most recently announcing that they acquired in April LPG assets from a business located in Bernard Lodge called Winston Beck LPG. So great location. Bernard Lodge means they'll be very well positioned to be able to launch into Portmore St. Catherine, second largest community in all of Jamaica. So it tells me that we can expect further growth and expansion in the LPG business. When we looked at the profitability and great fourth quarter interim financials that you put out there, FESCO, so kudos to Trevor Barnes, Jeremy Barnes, Trevor Heaven, the team over there at FESCO. We really like what you're doing, showing great details on the financials, and it gives us the ability to appreciate what caused the 100% increase in expenses. In particular, other expenses is the only thing that I would have liked to have seen a little bit more detail. We just hear that it's got some bad debt in it, registration fees, etc. We saw $50 million growth in other expenses, and we saw over $50 million growth in staff costs. The staff costs we understand because they're staffing up to do the LPG business and preparing for that. So I look forward to seeing what that, roughly $1.7 billion in capex is going to result in future income to come. They warn that the amortization costs associated with that capex may outstrip the revenues that they're going to get immediately from the LPG business, but we can only hope and expect that there's going to be strong growth coming forward from FESCO. Total assets up by 36% to $3.8 billion. Shareholders' equity up by a whopping 68% to $1.3 billion. And despite taking on $2 billion of debt in the last 2 years, they still have a healthy debt to EBITDA, which is less than 3 times, and a debt to equity of about 1.34 times. So carrying a healthy amount of debt, growing the business substantially, over 200% growth in profitability since IPO when they were making $131 million. So that's impressive, now up to $566 million. And I think they have further growth to come. Next slide shows sort of the quarterly growth and profitability, and you can see in the last 4 quarters that their profitability has ranged from $130 to $150 million. And again, so we're expecting to see another step change in the next 2-3 quarters as the LPG business comes online. So I do think there's great future growth to come. Back to the first slide, I forgot to comment on the share price relative to earnings, which gives us an 18 times PE. So that sounds a little rich in a junior market, which we said on average runs at about 15 times. But when your business is growing by 100% year over year, it will trade richly because the market is expecting future growth and for them to therefore grow into that earnings. So I don't think it's trading richly from a growth perspective. I think even having bought it at $1.30 and seeing it up to $4.10 in 2 years, I still think this stock has great legs to grow as they further grow their profitability. So next slide on the earnings we mentioned, and now on the stock price, finally, you can see the stock is traded at a high of $8, albeit for a very short period of time. It's trended down a little bit over the last 6-9 months again, which is common, what we've seen in general throughout the stock market because of the increased interest rates in general. But as we said before, as those interest rates start to come down over the next 3 to 6 months, we expect to see many stock prices starting to go up. In this case, I expect because of the profitability, further growth in profitability, plus the adjustments to PEs, that we will see the stock price growing, I would predict by about 25% in the next 6 to 9 months. And we really look forward to seeing the results of the LPG business, which in general, as I understand it, tends to be a very profitable business, pretty capital intensive in terms of, the filling plant and the storage tanks and the distribution network required to make it work. But when you make it work, it can be a very profitable business. So we look forward to that. So far, they've delivered above and beyond their promises back in IPO stages in terms of where they're going to be in year 2 and year 3 profitability. So kudos to the management team over there. Again, big up to Jeremy Barnes, his dad, Trevor Barnes, and the chairman, Trevor Heaven. You guys are doing a great job. Also, special shout out to Hugh Cord, who's also one of the management teams and a good friend of Mayberry, of course. In fact, they all are good friends of Mayberry. And so this is an IPO poster child. Great job, guys. And we look forward to better things in the future. Justin, your thoughts?
Sure then. All right. So if you go back to the first slide, you'll notice that FESCO, as we said earlier, they've been doing amazing in terms of growth, whether it be top line, bottom line, wherever you want to look at it. It's apparent that FESCO has been absolutely exceeding expectations. Dan quoted earlier that it was 55% above their target for the projections. So as far as the financials go, or the business side of it, nobody can complain with FESCO. But I do believe in terms of stock price, it's a bit more material than that in terms of the people want to see where the growth is actually coming from right in front of them. So right around the time when the stock price was absolutely ballooning up from like $4 to $6 to $8 the first time around. That was when they were doing that's when they had set up Ferry. That's when they set up the Beachwood location. And people were really starting to see it and say, oh, FESCO is this, it's that. It was going around, it was posting out and saying, I'm buying FESCO gas because I'm a shareholder. And that aspect of it really started to push it in terms of the minds of the people. So as I said, once they really start to ingrain themselves out in Bernard Lodge, set themselves up in Portmore, and people are actually seeing the FESCO trucks delivering that LPG to people's houses or wherever it may be, it's really going to start pushing back into the minds of the people, because it's retail really sets the share price. So to get it from $8 to $4 now, the people that bought it at about 8, either holding or they just decided, well, let's shift our portfolio into other things. So once it starts to come back more materially in terms of right in front of people, I believe you'll start seeing the price teeter back on up towards there once we start getting that uproar in terms of FESCO is here, it's doing great stuff, and they're going to continue pushing it out from there.
Yep, thanks for that. And what I like about it is it represents Jamaican investors playing in the space, the first gas station to list on the stock exchange, run by Jamaicans, owned by Jamaicans, and we see them being very innovative, introducing E1088 gas, now 93 fuel, which I'm excited about, and continuing to introduce new products and expanding the network. So I could hardly ask for more from these guys. Well, thanks for that, Justin. Thanks, folks, for tuning in today. That's it for today's discussion. Big thanks to you folks who tune in consistently. And I'd also like to thank Justin, who's becoming a regular panel member. Thanks for the great job. Really appreciate that. And if you're curious about updates on our virtual investor forum, then find us on social media. We share live stream dates and upcoming guests on our social media pages. So give us a follow up and stay on top of all things forum related. And don't forget to subscribe to our YouTube channel, Mayberry Investments Limited, and click on the bell to receive all our notifications. Well, folks, keep safe, and remember, wise investors, slow and steady wins the race. Goodbye.